Hi there. Welcome to Real Turkey channel. Let me adjust my microphone here. I am Atilla Yeşilada, your loving, caring host and presenter. Once again, apologies for the poor production quality. This is a homemade broadcast since our production crew are suffering from several diseases and other ailments. And we don't want to travel because there's coronavirus everywhere, as everyone knows. The Turkish government just hides it. That was a joke. There is no coronavirus in Turkey, and I hope that disastrous infection would be over soon. Today, I want to talk about the Turkish lira, which is once again under the pressure. I'm broadcasting this Istanbul time, 1 p.m. on Tuesday, 18th of February. And Turkish lira is trading against the American dollar at roughly 6.07. That's $1 fetches 6 liras and 7 cents. In Turkish, that would be kuruşes. The lira closed 2019 at 5.95 against the dollar. So there has been a small amount of depreciation. But actual depreciation of the currency would be much bigger had the state banks not intervened on behalf of the Central Bank of Turkey. The numbers used in these foreign exchange sales are never made public. Nevertheless, reliable sources I've talked to on the trading desks suggest that since the beginning of the year, between $10 and $15 billion might have been sold to slow down the devaluation or depreciation of the Turkish lira. Nevertheless, it hasn't helped. And the lira remains under pressure and shall do so for a few more months. The reason I talk about the lira is it has very severe repercussions on economic and financial stability. And I want to explain why the lira is under pressure and how long that might last, where the lira might go, and what might happen to basic economic and financial parameters. Well, first of all, obviously, as far as foreign exchange goes, the global environment has changed against the emerging markets, of which Turkey is a leading member. The dollar index is always bad. The rise in the dollar index is always bad for emerging markets. And when I checked this morning, the dollar index was soaring towards the level of 100. So stronger dollar, weaker emerging markets currencies. In general, the Turkish markets are weaker today and shall remain so because of the coronavirus scare or COVID-19. Despite assurances from the Beijing government and to certain extent from World Health Organization, I think investors are realizing that this corona is a different baby. We don't know enough about it, and its spread may not be over as soon as authorities have predicted. Already we're getting signals of substantial slowdown from China, which is spreading to Singapore, Japan, Germany, and the United States economy has not done well, according to the latest numbers, though it is in much better shape than the rest of the world. Clearly, growth is an important parameter when investors are buying emerging market assets, and when growth is slowing down, there's an escape from risk. Money goes to dollar, to Swiss franc, to Japanese yen, and to gold. Gold is, in Turkish lira terms, is making new highs as I speak. But Turkish lira, even though it's not the worst performing currency, is under significant pressure despite some of the advantages that we have vis-a-vis other developing nations. For instance, Turkish growth figures have recently been very decent. Our team expects 1% quarterly growth in the last quarter of 2019 and 5% annualized growth, credit volumes suggest, the budget deficit suggests that growth will continue into the first quarter. More importantly, I don't want to benefit from anybody's misery, but because of the coronavirus scare in China, some of the textile and shoe manufacturing orders have shifted from China and Asia to Turkey. So Turkish exports might perform slightly or moderately better than expected, which is going to be an help in terms of narrowing the current account deficit. Unfortunately, these advantages are not enough to mitigate the policy mistakes and what we call geopolitical risks. I want to start with the policy mistakes because as you watch this video, which will probably be Wednesday, Central Bank Monetary Policy Committee will meet once again, and it is expected, according to surveys, to announce another rate cut of 25 basis points. I would think it could go anywhere from 50 basis points to 100 basis points, simply because our president, Mr. Erdogan, wants single-digit interest rates. He thinks the lower the interest rates, the higher the fixed investment, and the higher the inflation. Don't ask me where he got this theory. Currently, the central bank policy rate is 11.25%, and if the central bank wants to get to single-digit policy rates, it must hurry up. 25 basis points won't do it. But the problem is currently inflation is running over 12%. And when we look at the central bank's own monthly survey of inflation tendencies, it is very unlikely to close the year at less than 10%, whereas the TL deposit rates are at 9.5%. And that is before tax. And tax depends on your income bracket, obviously. So put yourself in place of a Turkish saver or investor who is trying to make a choice between Turkish lira deposits or Turkish lira assets and FX-denominated assets, Turkish lira assets based on the current inflation, on expected inflation, are returning a negative yield. Why take the risk? It is much easier and much safer, much more prudent to park your assets in dollars, euros, gold, Turkish euro bonds denominated in foreign currencies. And that's what Turks have been doing. This is what's called dollarization. And Turkish citizens, as well as corporates, have been heavily buying foreign currency to hedge themselves against inflation risk and against negative real returns. Secondly, of course, there is the conflict in Idlib, which pits Turkish army against the Syrian National Army. Our president vowed to start a military campaign in Idlib unless the Assad regime withdraws outside Idlib, is the simplest way I can put it, before the end of February. Assad doesn't care what Erdogan says, so his soldiers are resolutely advancing towards the Turkish border. Turkey hopes that Russia would intermediate and call for a ceasefire, but Russia is not helping this time. And only in the last 2 days, 108,000 more poor refugees have flocked to Turkish border. If Turkey were to lose Idlib, at least 1 million more refugees would inundate Turkey, killing the welfare budget and the health budget and causing serious social frictions. Obviously, both experienced financial investors and Turkish people, Turkish investors are aware of this situation, and they are not panicking, but they are behaving very cautiously and conservatively and running away from risky assets. So bond yields have risen and the stock market has fallen as a result of that. Now, the situation is not going to end. Turkish lira is going to remain under pressure despite state bank intervention, unless the central bank starts raising interest rates and not or, but and the Idlib conflict is resolved one way or other. I mean, some kind of ceasefire. And that will not happen before the end of February. It is quite possible that the Idlib situation gets worse in the sense that Russia shakes its hands off this whole affair, and Turkey will actually have to engage in a pitched battle against Assad's army to defend the northern quadrant of Idlib. And war is extremely bad for financial assets. Or coronavirus might turn out to be much thornier than people thought, and there would be an EM-wide emerging market panic. I'm not saying these are the most likely scenarios, but obviously, as days pass, investors would increase the likelihood of these scenarios transpiring. Where could Turkish lira go? I mean, another 5 to 10% depreciation against the dollar before the central bank raises interest rates is a certain possibility. I look at the central bank survey once again, which is the only monthly survey about exchange rates and interest rates. It shows the dollar TL pair at 6.45 at the end of the year. So another 8% depreciation until the end of the year. We might see that 8% depreciation, 10% depreciation within the next 15 days to a month. It is not the currency, as I've said, I'm concerned about, but there is a very strong correlation between the Turkish currency and the inflation rate. That's called the pass-through. As Turkish lira depreciates, inflation accelerates. For every 10% depreciation in the Turkish lira versus the dollar, we add 2 percentage points on top of expected annual inflation. So if the lira depreciates another 10%, say, our forecast for year-end inflation is 12%, it will rise to 14%. And that would lead to further dollarization and, of course, further falls in disposable income. Secondly, Turkish corporates are heavily indebted. Turkey needs to refinance or pay off $180 billion of maturing foreign loans and bonds this year. And the revenue to pay off these loans and bonds is not exclusively, but largely in Turkish lira terms. So if Turkish lira depreciates against the dollar, it becomes much more difficult to make interest payments or pay off the principal of such loans. That means economic instability in the sense that corporates will be making less profit or no profit at all, and they would be laying off workers and delaying their fixed investment plans, which is bad for the economy. So we're really poised at the threshold of the abyss. I mean, sometimes these currency shocks happen. They have very short-term reasons and they go away immediately once you find the remedy. But right now we're dealing with a situation where Erdogan is committed to lower rates, and another one, Idlib, where we don't have any control. And finally, the coronavirus. I think these three vectors have coincided to make the Turkish lira weaker. And really, I don't see a way out for the state or the central bank to stop the depreciation of the Turkish lira. I am very wary that further depreciation of the lira would erode the Turkish growth story and might even lead to a recession. One day, hopefully, I want to shoot a video full of good news. I read all of your comments and I want to thank you. I know you think I am too pessimistic, but this is how life really is in Turkey. I hope you like this video. Give us a thumb up. Give us a thumbs up and forgive us for the poor production quality. Share if you like. This was Atilla Eşalada. Bye-bye.